Hello everyone, this is Kathy Lean with our How to Trade US dollar, euro, British pound, and Japanese yen master class session. This is one of my favorite sessions because it really does provide to you some of our unique ideas for trading the major currencies. And before I begin, I would like to share with you this disclaimer that says trading Forex carries a high level of risk and may not be suitable for all investors. So for those of you that are watching this video on demand, I highly encourage you to pause the screen, read through the disclaimer thoroughly, and then continue moving forward. This session we talk about tips and techniques for trading these four major currencies. In the next session, we'll cover the other currencies like Aussie CAD, Kiwi, Swiss franc, and also cover some of the basics of trading these currencies for those of you that are relatively new. Now, you all may know that every currency and every currency pair is unique because they all have their own rhyme or rhythm. We previously talked about how on a given day, the US dollar can easily dictate where the entire market is going. And while that is true, dollar pairs are not the only things that we trade. There's also plenty of opportunities to trade other major currencies that do not include the US dollar, namely the currency crosses. So, we'll take a look at that and we'll talk about, what some of those opportunities are, what some of those opportunities could be. Now, to begin, I think it's important to realize that not all currencies are quote unquote made equal. And the reason why I say that is because certain currencies are moving much more than others. And certain currencies have more liquidity. Let me just respond to this email. Sorry. Not all currencies the same amount of liquidity. The euro dollar is hands down, if you look at the right-hand side of the table, is hands down the most actively traded currency pair out there. But while that may be true, it is rivaled by the dollar yen, which doesn't have that much less in terms of trading volume. It's 18% versus 24%. The other currencies are, on the other hand, are about half or a third that amount, where, pound dollar is almost 9%, Aussie dollar 7%. So if you are new, it is generally advisable to focus on the most actively traded liquid currencies. And the reason for that is because they tend to have the most orderly price action. The least gaps behave the most naturally. And so they tend to be I wouldn't say safer, but they tend to be better for better currency pairs for investors to start off with. So, that's why we typically recommend starting with those currencies. So euro dollar and dollar yen, but the other currencies we trade actively every single day as well. So starting off with the US dollar. If we start off with the US dollar, the first thing that I would like to share with you is just a little bit of background information on the greenback. The US dollar, the symbol is US, dollar sign, and the nicknames are the greenback and the buck. We previously talked about how 85% of all currency transactions involve the US dollar. So even if you have a difficult time following the economic data of all the countries that we trade. At bare minimum, it is important to follow the economic releases of the U.S. because on any given day, when U.S. data is released, it will have a dramatic impact on all of the major currencies, including the including dollar yen, because U.S. data kind of drives overall market flow, and on any given day can very much dictate the general trend of the markets. The U.S. dollar is also the world's primary reserve currency. So if you recall, a couple years ago, the U.S. was stripped of its AAA rating, sovereign rating. And instead of being the disaster that it could have been for the U.S. dollar, the U.S. dollar ended up being okay and, is now trading at significant highs. And the reason for that is because global investors and foreign investors really don't have much choice. The U.S. bond market is the largest bond market in the world. So if they want a place to recycle their funds or to park their funds, then it will very much be in the U.S. Treasury market and the U.S. dollar, because there really isn't much more in terms of additional choice. So even if the U.S. is stripped of its sovereign debt rating, it doesn't necessarily mean that investors are going to bail out of U.S. dollars. Because it's a reserve currency, what that also means is that central banks, there's always sort of innate demand for it. Central banks around the world are always kind of buying, U.S. dollars in order to meet some of their demands. And more than 25 currencies of other countries peg their own currency against the U.S. dollar. That is why, the Japanese and the Chinese are, the two of the world's largest holders of U.S. dollars, because they have a lot of reserves, particularly the Chinese, because the Chinese always need to, kind of maintain this peg for their currency. And in order to do that, they are always, buying and selling U.S. treasuries, more buying than selling. On a net basis, these are the average daily ranges in terms of how much volume is done against these currencies. So you can see 87% of all, it's actually higher, 87% of all currency transactions involve the US dollar, 33% involve the euro, 23% involve the yen, and you'll have the rest of this data in the PowerPoints that we upload to you. Now, in terms of the central bank, the central bank in the U.S., as you all are probably familiar with, is the Federal Reserve. And they have a dual mandate to maintain price stability and sustainable growth. In 2016, going to 2017, even 2017, the Federal Reserve feels like they're very comfortable and almost reaching their dual mandates. And so that's why they, are at the cusp of a larger tightening cycle and ready to raise interest rates. The Federal Reserve Chairman, as of 2017, is Janet Yellen. And while the Federal Reserve pretty much meets every single month, there's 4 meetings that are of particular attention. And those meetings are the quarterly meetings. And the reason why they're the greatest attention is because there are press conferences released by Janet Yellen or the Fed chair after those meetings. So typically major changes in monetary policy are generally done at those meetings because having the press conference gives the Fed chairman or chairwoman the opportunity to explain herself or explain the move and kind of set expectations for future policy changes. So therefore, it is extremely, extremely important. Minutes, and this is not true of all the countries, minutes from the Fed are released separately a couple weeks after the FOMC meeting. So it gives you two opportunities for potential market volatility. Janet Yellen, just a little bit of background. Janet Yellen is the first chairwoman of the Federal Reserve, so that's a pretty big deal. And she is a noted dove. I mean, she's very careful about what she says, and her tone, I think, is extremely important to pay attention to, but typically she has dovish leanings. And the reason why this is important is because if she has dovish leanings, then if she's hawkish, that is something you should pay attention to. Because if a dove is a hawk, then there's a strong reason for her to be a hawk, and therefore it's probably much more significant than if you have a hawkish Federal Reserve member make hawkish comments. The bottom line is that Janet Yellen is a hawk when she feels that interest rates should rise. So normally she's a dove, and if she makes hawkish comments, that's obviously very impactful. More details, the most important trading partners, the U.S. are Canada, China, Mexico, Japan, and Germany. So, but the U.S. is mostly self-sufficient. That is why the strength or weakness of the U.S. dollar is kind of less important for the Federal Reserve than it may be for the Bank of Japan, for example, where the value of the currency has a much bigger impact on economic activity, whereas the U.S. does not necessarily rely on trade. So that's why the U.S. is never really excessively worried about a strong dollar. The most important economic releases for the U.S. are the following. Non-farm payrolls, retail sales, PMI manufacturing, services, the monthly CPI inflation numbers, GDP, trade balance, and the University of Michigan Consumer Sentiment Index. The dollar is the most active pretty much around the London Open and when U.S. economic reports are released. And U.S. economic reports are typically released at 8:30 or 10 o'clock New York time, but the FOMC minutes, when they do come out, are released at 2 p.m. New York time. So some trading tips for the U.S. dollar. The first one is that the dollar is driven by U.S. yields and risk appetite. There's a very important impact that you see on the dollar based upon these things. And I want to show you an example of what I'm talking about. So we take a look at the dollar index. And that's just kind of reflective of how the market feels about the dollar in general. So we take a look at the dollar index, and let's overlay the 2-year yield spread. Well, let's just overlay the 10-year yield spread. Should be the same anyway. And you can see on this 1-year chart, and even so in the 5-year chart, although a little less so, but certainly so in the 1-year chart, where the green line is the 10-year Treasury yield spread, and the white line is the dollar index. And you can see that there's a very strong correlation, positive correlation between these two instruments, where when the dollar, when U.S. yields rise, the dollar index tends to increase as well. The next one to look at is stocks, because the dollar is also very sensitive to risk appetite. More so dollar yen than the dollar index itself, though. But if I pop on the S&P, you can also see that generally speaking, there's a nice positive correlation, which means that when stocks rise, it does well for the dollar, and generally speaking, much more so for dollar yen. Let me pop on dollar yen here. So the first trading tip is that if you're trading the dollar, or if you're watching the dollar, you want to figure out where the dollar is going, then you should be watching U.S. interest rates as number one, U.S. yields, and then as number two, risk appetite, because that will determine oftentimes how the dollar is trading. Second trading tip is that the dollar dictates where commodity prices are headed. Because a lot of commodities like oil and gold are priced in US dollars. And since they are priced in US dollars, therefore, I think it's important to realize that when the US dollar rises, generally speaking, we will also see a corresponding move in commodity prices. So if the dollar rises, you'll see a corresponding sell-off in oil prices, for example. So once again, I want to show you my graph. So we're going to overlay the dollar index with oil. So oftentimes, if you want to think about, where is oil headed, that can oftentimes be answered by where the dollar is headed. So you can't see, it's hard to see inverse relationships on these charts. So I'm actually going to, I wonder if I can invert this. I don't think I can. So we'll just take a look back at this when we can. But typically you see here, the dollar's falling, oil, which is the green line, rises. Sometimes they rise in unison or they move in unison. But more often than not, if you look at a long-term chart, there's more of an inverse correlation between oil prices and the dollar because oil is driven by the dollar. So it's very difficult for oil prices to rise when the dollar is strong. And in fact, there's a greater chance of it falling than anything else. And the same story is with gold. And the last, is this the last one? No, I have one more after this. And the third trading tip is that positive U.S. data may not always be positive for the dollar. So I want to review this. First of all, the dollar is driven, where the dollar is headed is driven by U.S. yields and risk appetite. And we looked at those charts. Number two, the dollar dictates where commodity prices are headed. So if you're watching commodity currencies, then it's very much worthwhile to watch where the dollar is going. And number three, positive U.S. data may not always be positive for the U.S. dollar. And then what I mean by that is that positive data could very much be positive for dollar yen, but there was a very long period in the past where positive U.S. data was actually negative for the dollar versus the euro, for example. So when we had a good piece of U.S. data, euro dollar might rise. And the reason for that is because the market viewed it as positive for risk appetite. And they thought that, we have a great U.S. non-farm payrolls report, so therefore we should be driving up stocks. And because generally speaking, the euro dollar has a positive correlation with stocks, which we'll take a look at later. They also drove up the U.S. dollar. So positive U.S. data is not always positive for the dollar, but oftentimes it is positive for dollar yen. And the last trading tip is that dollar flows will often reverse when the EU markets close at 12 noon. So what that means is that let's say a huge rally in the US dollar going into the London close. What will oftentimes happen is that like let's say you have a huge rally in the dollar, maybe around 10 o'clock New York time going to 11, but as we head closer to 12 o'clock, you may have some profit taking because London traders are leaving for the day, and because they are leaving for the day, if we've had a big move, they may be tempted to get out of their positions before leaving for the day and take profits on any positions that they may have had. So that's a unique characteristic that could potentially happen. And it can happen at any time, maybe around even between 11 to 12 hour. But after that, you may have a burst higher. And the same story is also that dollar flows could oftentimes reverse at the New York close because U.S. traders, bid the dollar higher, and as they get ready to leave the office, they may be tempted to take profits. And I wanted to show you an example of that. Hold on one second. Let me share with you my charts. So this is a chart of dollar yen, and we'll just take a look at the 15-minute chart. So I just want to show you one day prior to the current day, and I'm just going to draw a line, vertical line. So this is pretty much the New York close, 4 o'clock. 4 o'clock, 4:15. And you can see dollar yen been rallying throughout the day. 4 o'clock, New York close, dollar yen ends up plunging and falling. Not plunging, but there's profit taking. At the London close, we actually, pretty much between 11:30, because London closes at 12, right? Just as New York closes at 5. New York time. So it's before the close that you tend to have the profit taking. So the hour before the close, let's say 11:15 or 45 minutes before the close, you start to have profit taking after the very nice move. And let's take a look at the day before that. We'll see whether or not that's the case. So 4:15, this happens a little early actually. It happens at 4. But you can see that dollar yen have been moving higher throughout the North American session and then really collapses pretty much into the New York close. And then 11:15 here, it takes a little longer where we had a rally, and it takes until 12 before we have a little bit of a pullback. But, you get the gist of I hope you get the gist of what I'm trying to say. And the example, and you can see that, in 2 recent and random trading days. Where, so it's a very important tip, which is that if you see the dollar run up and we're nearing the New York London close, don't keep buying, because chances are if you want to buy, you'll have an opportunity to buy on a pullback. Or one idea is to potentially trade the reversal and to trade the potential turnaround in the currency. Euro. The euro, here's the symbol, some background information. The euro is the only currency without a country, and that's its greatest advantage as well as disadvantage, meaning that since there are 19 members in the Eurozone as of today, there's 19 ways for the currency to get destroyed, either politically, economically, or socially. We saw that with the Greek crisis. We have constant political crisis in Italy, and we've got elections in France in 2017. Small countries, even Portugal has caused, tiny little Portugal has caused problems for the Eurozone. So a lot can go wrong, and a lot can go wrong quite quickly for the currency. So, that's pretty important in my opinion. And it's one of the greatest dangers for the euro, because if more countries decide they want to leave the European Union, regardless of how big or small they are, they could very much bring down the euro. Collectively, though, as a unit, the Eurozone is the largest economy in the world, and Germany is the largest country within the Eurozone. The euro is the second most important reserve currency next to the US dollar, because if traders aren't buying US dollars, if central banks aren't buying the US dollars or not parking their money in US dollars, the only second best option is the euro. So some quote conventions, the euro is always the first currency in the pair. And the pip value for the euro dollar is about $10 for every 100,000 units. And the average daily range for the euro dollar is about 80 pips. So pretty manageable, I think, for most currencies. And the key metrics for the euro dollar is the German U.S. 10-year yield spread, which we'll look at later, and also stocks. The ECB is the central bank, European Central Bank of Europe. So whenever we say ECB, that's who we're retaining to. Its current chairman is Mario Draghi. And unlike the Federal Reserve, who only holds a press conference, at their quarterly meetings, the ECB holds a press conference at every meeting. So oftentimes, the rate announcement, which comes, I think, an hour before the press conference, is far less market moving, unless, obviously a change is made or a change is expected, than the press conference, because that's where we get the guidance from the central bank head. And that is oftentimes much more market moving than the rate decision itself. Unlike the Federal Reserve, who has kind of an esoteric price stability, sustainable full employment target, the ECB goal is to keep inflation below a very specific amount, 2%. So that provides a very specific metric for all of us to focus on. Mario Draghi is a very plain-speaking central banker, very much like his predecessor, Jean-Claude Trichet. And I think he's very direct, where he says his mind, he doesn't skirt around his views. And so we should pay very close attention to everything he says and doesn't say. Also, what's unique about the ECB is that oftentimes we'll get a very consistent message from the central bank before a major decision is made. So if, for example, they want to raise the interest rates, there is a very consistent message where central bankers start to get very positive or optimistic and start to make some really hawkish comments. And when you hear this consistency, then you better listen to it, because even if you don't think that they should be raising interest rates, if they are telling you that they plan to raise interest rates, then you better pay attention to that. The Eurozone, even though services is such a large part of the economy, the Eurozone is very much export dependent. They are very much export dependent, and so as a result, the value of the currency is extremely, extremely important. So if the euro is too strong, the ECB does get nervous, whereas the Federal Reserve, won't get overly nervous if the US dollar is too strong. So, we pay a lot of attention to that, and if it gets too strong, that could end up leading to weakness in the economy, because we all like to say that the path to a stronger currency for the Eurozone is usually through a weaker one, and the path to a stronger The path to a stronger economy is through a weaker currency. The path to a weaker economy is through a stronger one. So weak currency is very good for the Eurozone, whereas a strong currency is not. It's Eurozone's most important trading partners in order is the U.S., China, Switzerland, Russia, and Turkey. These are the most important employment reports for the Eurozone: German employment data, retail sales data from Germany, the PMIs, consumer prices, GDP, trade balance, German zoo survey, the consumer confidence report, and the ECB press conference. Now, the only data that we focus on from the Eurozone is either Eurozone data or German data. And generally speaking, German data is the most important. We don't pay any attention to French data, Italian data, or Spanish data, even though they're the second, third, and fourth largest economies in the Eurozone, because what only really moves the euro is German data or Eurozone data or central bank comments. The most active trading hours for the euro is the London Open, when Eurozone economic reports come out, which is generally around 9 or 10 GMT, as well as when U.S. economic reports come out. But I would say that the euro is active almost all the time because, as you saw, it is hands down the most active currency pair, the euro dollar. The first trading tip is that the euro is the most liquid trading instrument in the world with over $1.2 trillion in daily volume. So as a result, it is extremely active in the sense that when it trends, it can trend, very strongly. And when it's range bound, there could be a lot of two-way interest. And it doesn't gap as often as some of the other major currencies may. So if you are a newbie and you're new to Forex trading and you want, a currency pair because it's so liquid, has very tight spreads. If you want a currency pair with tight spreads and fewer gaps, then the euro dollar is the one that you want to focus on. Although I would say that generally speaking, we don't get too much in the way of gaps in the Forex market. Euro tends to trend best because of the ample liquidity in the currency. And the most important thing for the euro dollar is the yield spread. So let's take a look at that. So pulling up the yield spread, I actually look at this often, so I have a chart already built for this. This shows you the orange line is the yield spread and the white line is the euro dollar. And we go to a long-term basis. You can see that there's a very strong correlation between the euro dollar and its the spread between 10-year German and U.S. yields. And it's very, it's actually a huge leading indicator for where the euro is headed. So if you can see from this chart, you can see that the euro dollar, there's no kind of arb opportunity, but the euro dollar is definitely breaking down as yield spreads continue to fall. And lastly, the euro dollar correlates very well with risk assets unless there's sovereign debt troubles. So let's take a look at the yield spread, the DAX against the euro dollar. So I'm changing the orange line from the yield spread to the DAX. And you'll see that on a 5-year basis, well, actually it looks like more of an inverse correlation, doesn't it? I think that it's because Eurozone has a lot of its unique problems. But generally speaking, if you look in the past, like 2012 to 2014, there's a very strong positive correlation. It only really kind of broke down when we had two things happening, which is that we had Europe's sovereign debt crisis, and more importantly, a lot of the weakness in the euro in 2015, 2016 particularly, it was driven by easy monetary policy from the ECB. So more stimulus, which is actually good for stocks, and negative for the euro. So it was a very different dynamic. But things will get back to normal. And when they get back to normal, when central banks are all aligned in policies, when the ECB stops raising interest rates, we'll be in a position where the euro dollar actually rises when stocks rise. Another trading tip is that the euro key levels are generally broken after either the London close or before the New York close. It's something that we've watched very significantly. Sometimes it happens beforehand, but sometimes very round numbers, and the euro dollar can be broken during quiet, low volatility trading sessions. Euro crosses, there are a couple crosses that are very much Eurocentric. For example, Euro yen, Euro pound. So if you look at Euro pound, very much driven by market's appetite for euros as well. And euro pound is unique in the sense that euro pound is a quieter trading currency pair than the euro dollar, which you can see from the very, very strong trends that we have in the euro. That euro pound is a much quieter currency pair. And it ranges more often. But when it breaks out, you can see it ranges a lot. When it breaks out, the breakouts can be huge and can have quite a bit of continuation. Euro yen is a risk currency, usually very much sensitive to stock market performance. Let's see how it has correlated. Let's pull up euro yen with the Dow. So this is euro yen. Let's do the S&P, U.S. stock market index. So if we go to a 5-year chart, you'll see there's a very strong historical correlation with the U.S. stocks. What that means is that in the past and very often, what you will see is that when U.S. stocks rise, dollar yen is generally rising. And when U.S. stocks fall, dollar yen is generally falling. And so I think that this is a very important correlation to be mindful of, even if it has been broken in recent days. And then the last cross that I want to talk about is Euro Swiss. Euro Swiss is, if we look at a weekly chart, is very much like the euro pound in the sense that it doesn't move by much. It's a very, very low volatility currency pair. So if you want a currency pair that ranges a lot and has very low volatility, Euro Swiss is your best bet. Although Euro Swiss sometimes can have a dominant trend, like you see during this October-November period. But even when it has a dominant trend, there's a lot of kind of quote-unquote recoveries. And the reason why there are recoveries is because a lot of reason why there's recoveries is because there's a lot of two-way action in the currency pair. And with the Euro Swiss, it generally doesn't fall too much because the S&P tends to be very worried about the value of the currency. Next up, the British pound. The British pound, the symbol is GBP. Its nicknames are pound, cable, or sterling. It has 3 nicknames. The reason why it has 3 nicknames because, first of all, it's one of the oldest currencies. And there used to be a transatlantic cable that connected dealers between the UK and the US. And so that's why they called cable. And pound comes from British pound and sterling comes from pound sterling. The pound is the 4th most actively traded currency. And for the pound, for the UK economy, the value of euro pound is just as important as the pound dollar. And the reason for that is because the Eurozone is such a because the UK does the majority of its trade with the European Union and the Eurozone. So in many ways, the value of euro pound is more important than the value of pound dollar, even though pound dollar is a much more actively traded currency than euro pound. Trading mechanics, the quote convention is GBP. Pip value is also $10 for every 100,000 units. The crosses have different pip values for euro crosses as well as pound crosses. And I think that's something that's very important for traders to realize. Its average daily range is much larger than the average daily range of the euro dollar, nearly double. So it's much more volatile and it's worth the same amount. So therefore, the pound is more quote unquote dangerous to trade unless you've got an appetite for bigger moves. Then you perhaps want to avoid trading the pound. If you want a currency pair that trades more orderly, the euro dollar is definitely the one to focus on. I like trading the pound a lot because there's a lot of unique tips and things that it does, which I'll go over next. But it's more for intermediate traders, I guess. The UK is the 5th largest economy in the world. It is a service-oriented economy like the U.S. So what that means is that it's a service economy like the U.S. And what that means is that what you can expect is they are less sensitive to the value of the pound than the Eurozone. But still, the value of the pound is important because a weaker currency does provide, help to boost inflation and also help to provide significant support to the economy, whereas a stronger currency can, lower inflation and hurt the economy. But they are service financial industry-centric economy. So if there's like a quote-unquote banking crisis, that can be quite worrisome because the banking sector is so significant and so important for the UK economy. Now, it's one of the most developed capital markets in the world, but their recent decision to leave the European Union poses a significant risk for the UK economy and the long-term attractiveness of UK markets. So that's something that's very important for you to know about the UK. And the UK is a net importer. The central bank, the Bank of England, is the world's oldest central bank, created in 1964. They have a mandate to keep inflation below 2%. The central bank governor is Mark Carney. These days, they release the minutes right after the meeting. So what's really interesting and important to know about this is that the minutes contain the voting record. It'll tell you how many people voted for the decision or against this decision. So even if the central bank leaves monetary policy unchanged, you may have a reaction in the British pounds based upon the tone of the minutes as well as the voting, how many people voted for and against the decision. This was different from the past, where when they left interest rates unchanged, they had pretty much a one-liner comment saying that we left interest rates unchanged, and it wasn't market moving at all. But nowadays, it's very different. When the quarterly inflation reports are released, Bank of England Governor Carney will also hold a press conference. The quarterly meetings, like the quarterly Federal Reserve meetings, can be very important for the pound dollar. Mark Carney will be the Bank of England head until June 2019, so we have a couple more years. After that, we'll probably get a new governor. He's actually Canadian, and they kind of poached him from Canada, brought him to the UK as the head of the BOE, and he's a really great central banker. I mean, throughout the Brexit crisis, a lot of politicians criticized him for adding his 2 cents into the discussion, but he rightfully warned about the risk for Brexit, took proactive steps that really went a long way in kind of protecting the UK economy with monetary easing when they decided to leave the European Union. And, it's just a very proactive central banker, something, as a result, is also very dynamic. For the UK, these are the most important economic reports. Jobless claims, average hourly earnings, retail sales, the PMI numbers, the inflation numbers, GDP, trade balance, BOE meeting, quarterly inflation report, all that is very significant. Those most active trading hours for the UK are the London Open, when UK economic data was released, which is 4:30 New York time, and when US economic data is released. The first trading tip for the pound dollar is like the euro and like dollar yen. It follows interest rate differentials very closely, and it actually doesn't have a very strong correlation with the FTSE. Let's take a look. So I actually have the yield spread chart for pounds built out already. The orange line is the pound is the yield spread. The white line is the pound dollar. So very strong correlation over this 1 year period. Also an even stronger correlation over a 5-year period. So if you're trading the pound dollar, you better be watching the yield spread because it'll give you pretty good insights into how the pound's going to be trading. Let's take a look at the pound dollar versus the FTSE. So pulling up the FTSE, You can see on a 1-year basis, better correlation, but it's not always. I mean, you can see that the FTSE, which is the yellow line, is a lot more volatile than pounds. A lot of erratic up and down movements, like right around here and then right around here. So it doesn't have very good correlation with UK stocks. So don't worry about where UK stocks are going, but do pay very close attention what the interest rate differentials are. Sterling oftentimes peaks after news releases. You'll have a good number, it'll soar, and then peak after the initial move with not much continuation until the New York session joins the fray. And there's oftentimes reversals after the London close as traders kind of take profits on pound dollar positions. One of my favorite unique characteristics and trading tips for the pound dollar is that it loves to break round numbers. It loves to gravitate to and then break the round number. So if you're looking at 125, 126, and we're trading at it's falling from 126 to 125.50 to 125.30, that is probably going to gun for the round number. As a very strong, because it's so volatile, there's such a strong gravitation towards round numbers, and even breaking it by a little bit, going to the 85s to the 15s. Like if it's at 125, oftentimes we'll break it going to 124.85 by just a little bit before it finally reverses. And that's a very common characteristic of the pound dollar. And the pound can have very strong continuation moves. Don't fade the moves in the pound because it can go for much longer, much faster than you would expect. And a lot of that has to do with the fact that it likes to gravitate for the round numbers. Pound crosses are extremely volatile. The average daily ranges of pound crosses are massive. We talked about how the average range in the pound is about 150 pips, but the average daily range, except for euro pound, which is kind of thinner, the average daily range for pound yen, I mean, look at this one given day. We had a 260 pip move in pound yen. This day over here, I don't know if you can see where my crosshair here is a 400 point move in the pound. And what looks like an average day is still almost a 200 pip point move in pound yen. Pound Swiss, similar story. This looks like an average day, and this is almost a 200 pip move in pound Swiss. Pound Kiwi, average day, this is a 230 pip move. This is a 150 pip move. A small day for pound Kiwi, pound Aussie, pound CAD. It's like a 150 pip move. So very volatile currency pair. Lastly, the Japanese yen. And in the next session, you'll have Boris will talk about the 4 other major currencies. The Japanese yen, there's no nickname for the Japanese yen. It is, however, the 3rd most actively traded currency. It is the most liquid, free-floating Asian currency, and sometimes is viewed as the proxy for Asia. And it's very significant because typically when there's kind of an Asian crisis, you can expect the yen to respond. There's a lot of strength in Asian economies or in China that usually is beneficial for the Japanese yen. If there's a lot of problems in Asia, it's usually negative for the Japanese yen. Japan is a very manufacturing-oriented economy, so they live and die by the value of the Japanese yen. So that's very significant, and I think that's something that to pay very, very close attention to, because when the yen is too strong, the Japanese get very nervous. They don't get so nervous when the yen is weak, because a weak currency is good for their economy. But when it is too strong, that definitely becomes a problem. Bank of Japan, world's oldest central bank, created in 1882. Their goal is to maintain price stability near 2%. Mr. Kuroda is the head of the Bank of Japan, and he's only presided over easier monetary policy. And the Japanese economy for more than a decade has been very weak and needs more help, and that has not changed even in 2016, 2017. In terms of Japanese data is really not all that market moving. But if there are numbers to focus on, it should be the Japanese employment report, the Tankan survey, the PMI report, the inflation numbers, GDP numbers. But generally speaking, dollar-yen primarily moves on how the market feels about the U.S. dollar. And the crosses like euro-yen, pound-yen react upon based how the market feels about dollar yen and maybe the euro or the British pound. Rarely about Japan unless they do some sudden easing or tightening, or there's some sort of like earthquake leading to a tsunami, something very, or intervention. Unless it's a very rare, unexpected event, typically it is considered more, typically the yen doesn't really move on Japanese data. The most active trading hours for Japanese yen is during the Tokyo hours when Japanese releases are come out, but normally during European and U.S. opens and when U.S. economic reports are released. The first trading tip for the Japanese yen is that it can sit dormant for days and then move wildly. We see that with dollar yen. Dollar yen can be consolidative and then power higher. Consolidative, and then when it trends, it can trend for many, many days at a time. Correlates well to risk-off trades. We looked at this in the past where I showed you dollar yen as a very strong correlation with risk appetite. So, sorry. Let's just do dollar yen again. And I'm going to put the stock market, S&P, over it. So you can see dollar yen on a 5-year basis has a very strong correlation with U.S. stocks. So typically when U.S. stocks rise, it tends to be very good for dollar yen. The yen is a funding currency. So when investors are nervous, they will bail out of dollar yen and into other currencies. Sorry, bail out of the dollar and go into the Japanese yen. I also want to show you the correlation between dollar yen and the VIX. VIX can be volatile, so you're not going to see such a perfect correlation, but I do want you to notice the extremes. When VIX spikes, it tends to correlate with a drop in dollar yen, and same here. It's very difficult for dollar yen to be rallying when VIX is high, because typically when the VIX is high, it means that something is going on that's causing investors to be nervous. So the yen correlates well with risk-off trades, which means that when investors are nervous, they're buying yen and selling everything else: euro, dollar, pound, Aussie, Kiwi. And it's a funding currency, so when investors are optimistic and since it has a low interest rate, what they will oftentimes do is sell the Japanese yen, pay the low interest rate, and buy dollars, euro, yen, Aussies. It's vulnerable to intervention squeezes. If we talked about this in our either first or second webinar, where we said that when there's intervention, dollar yen is subject to intervention. When the yen is too strong, the Japanese can get very nervous. And when they're nervous, it can lead to quite a bit of a squeeze in higher in dollar yen. And that is one of the unique risks in dollar yen, whereas, for example, the euro is much less vulnerable to intervention. And dollar has a very strong correlation with the yield spread and the Nikkei. So if there's only one thing to watch for dollar, if you're trading dollar yen, it really should be the yield spread. The orange line is the 10-year U.S. Japanese yield spread. The white line is dollar yen. Very strong correlation, and even stronger correlation on a 5-year basis. You can see very, very strong correlation. And you can see that, we've got a very, very big movement higher when the yield spread moves up, and when the yield spread kind of falls, like over here, you see a sharp drop in dollar yen. Also, very strong correlation between dollar yen and the Nikkei. But I think it actually works the other way, where when dollar yen rises, the Nikkei rises because the weakness of the yen is good for Japanese companies. But sometimes when we have a big move in the Nikkei, that can also affect how dollar yen trades. So this is a 5-year chart. The yellow line is the Nikkei. The white line is dollar yen. And you can see very, very strong correlation between these two different instruments. And lastly, yen crosses. We already talked about this. We have a lot of yen crosses: dollar, euro yen, pound yen, CAD yen, Kiwi yen, Swiss yen, Aussie yen. And generally speaking, they do not move on how the market feels about the yen, unless, of course, it's for a unique reason. They almost always move on how the market feels about dollar yen, U.S. dollars, or the other currency in the trade, like Aussie, Euro, Kiwi, and CAD, and so forth. So with that, I hope it gives you a taste, a flavor of some of or a foundation of these major currencies and some of the tips that we have for trading them. In the next session, Boris will cover the other currencies, and you'll get some additional tips on that. So, any questions? The European Union has 28 countries. The Eurozone has 19 countries, Leslie. So there's a difference. Any other questions? We will be uploading the PowerPoint slides. What do I mean by round numbers? It's the double zero. For example, pound dollar, if it's near 125 is at 125.30, then it's probably going to make a run for 1.2500. It likes to make a run for the round numbers. Even the 50s, it likes to make a run for the 50 mark. If it's falling from 126 down to 125.70, down to 125.60, chances are there's a very good chance it's going to run for 125.50. Why is the yen a risk-off currency? Is there to do with the carry trade? Yes, it is because of the carry trade. The yen is a risk-off currency, because when investors are optimistic, they're willing to take on risk. So they're willing to borrow in Japanese yen, pay that ultra low interest rate, use their money, and buy a higher yielding currency like the Australian dollar or the US dollar. When they're nervous, it's not so much that they're buying the Japanese yen, but it's more that they're buying back the Japanese yen in order to unwind their risk on trades. The yen is kind of considered a safe haven currency because when investors are nervous, they buy back the Japanese yen to unwind the trade. So it's not as if they're taking a new position on. They're just unwinding their carry trades. What's happened to the yen today? Huge rallies in dollar. Because we have a huge rally in dollar yen, that's why you're seeing the yen fall across the board, because the yen crosses are generally led by dollar yen or what's going on in the other currencies, and today is dollar yen. If you have other questions, you can always email them to us at contact@bk4x.com. I'd be more than happy to answer them, particularly if you're watching this video on demand. Are there any additional questions? If not, you'll get Boris at the next session, and I'm sure you'll be excited to hear his views and to share our views on how the other major currencies are traded. All right, thank you so much, and have a great day.